Well, Mineral Resources Minister Susan Shabangu's statement in January stated that government reserved the right to take corrective measures to ensure that the country has sufficient coal for power generation, and that this would come after it's been declared as a strategic resource. Here to discuss this further with us this afternoon is Mark Ingham. He's director at Ingham Analytics, and Peter Major, mining consultant at Katie's Corporate Solution. Gentlemen, thanks so much for joining us this afternoon. Peter, let's start off with you. South Africa's designated coal as a strategic resource, a move that could limit exports to protect the supplies for our domestic power plants specifically. Justified in your books?
I don't know. This word strategic resources can be misused quite a bit. And we heard a lot of words like this after 9/11 in the States, when the federal government decided they had to take more control of people's lives, more control of departments. Okay, back then they called it a declaration of war. But yeah, strategic investments, it's almost like the government wants a license to just start acting unilaterally. And we're not sure government has the capability to do that. You know, government's grappling with all the responsibilities they currently have. Now, if they have to start allocating resources that have been allocated through a free market system for over 100, 150 years in this country, I'm not sure it's not going to lead to more problems.
Mm-hmm. I embellish this if we can, Mark. Sorry, can I just sort of follow on from what Peter's said? Does this mean that, let's say there's a long-term contract between coal producer A and customer A in China, for example. Let's suddenly say that Eskom needs a bit more coal. Can the government essentially declare force majeure and tell the Chinese, I'm sorry, we need the stuff?
Well, that's why I worry, is strategic resources giving government a license to now unilaterally make these kind of decisions and override established contracts, agreements, and ways of doing business?
Let's get your take, Mark, on what's unfolding here, because all this does is increase the uncertainty. It presents an unlevel playing field for investors as well.
Well, quite. I mean, these, to go back to that question again, I mean, the thermal coal producers in Aussie at the moment, Newcastle Coal, they're sitting down with the Japanese power producers and they're negotiating contracts. And, those contracts you can't violate. And similarly, Richards Bay has pricing reference. And so it's not the coal producers are the problem. Government should have thought 12 years ago about reliable power supply. Just making coal a strategic asset isn't going to resolve that. Well, has this been done before in any other country? I mean, I'm thinking of countries like Venezuela in different forms, but it does seem to me that I've heard this story before, as I said, and this is a derivative of other things that international investors have sort of thrown their hands up in the air at as soon as it's mooted. Lindsay, it's fossil fuel effectively is what you're referring to, and it's, however that comes about, be it oil or coal. So we aren't unique, but we do pretend to at least have a vaguely free market economy here with a responsible sort of democracy. And so therefore I think people who partner from a commercial point of view with South Africa and with South African producers would not like to see that broken. Once you break that trust, you don't regain it.
Yeah, and without us having thought about this, plans for sources of power in the past effectively enough, Peter, it puts the pressure on. So at this stage of the game, how do you balance then? Because it is a tough balancing act to play between security of supply locally, but also without losing those global markets.
Boy, to quote George Bush, this looks like a rerun of a bad movie. And it's one that we've seen before, and we definitely don't want to see it again, like Lindsay said. And there was a good editorial yesterday by Leon Lowe, Free Market Foundation, but he summed up so well. Does Eskom really know what's going on? Does Eskom really know what their cost of energy is? Does Eskom really know what a fair price is? There's so many questions he asked that I also asked. Does Eskom know all this? We're not really using that much more electricity than a year ago, 2, 3, 4 years ago, which means we're not really burning that much more coal. So where do these shortages come from? Why are people even talking about we're going to have to grab coal from producers? Is it because Eskom was based on a false economic model, that they were burning subsidized coal?
It's an economic model that's faced severe criticism. It's come through from NERSA. Today, the Business Day, Mark, running with the headlines, inefficient Eskom did not deserve the 16% increase.
What are international prices, I think, are at about a 5-year low now. So if internationally the coal price is at a 5-year low, that means there's too much out there. So why does Eskom have these shortages?
Well, that's right. I mean, coal, correct me if I'm wrong, Peter, but we're looking about $90 ex Aussie at the moment, around
it's
there.
about 83 out of Richards Bay.
Correct. So, you know, and these are prices that are well down from levels we saw in 2008. There is, in fact, probably too much coal, as you correctly say. And at the moment, the Aussies are struggling to get coal into China because there's enough supply internally from China to meet their own needs.
Behind the scenes, gentlemen, what's been the corporate reaction? The people that actually dig the stuff out the ground and earn foreign exchange for South Africa and make money for their shareholders, what have they been saying? Any idea?
What are the corporate guys saying? Hey, they've learned their lesson. The less you say in public, the better.
Do you agree
yeah, but
with
you
that?
go to these meetings, Peter. I know you're a bit of a ferret when it comes to getting information out of people. You must have heard something behind the scenes.
Lindsay, I'm not a coal analyst, but I do know there was a pretty nice balance in this country because a lot of our coal for a century plus, it's too low grade to sell overseas. It's too low grade to pay this huge railage fee, this huge loading fee, and this huge shipping fee to take it to the rest of the world. So it really worked out good. It's a very symbiotic relationship. We built large power plants designed to run on very low grade coal. We designed an oil from coal plant, Sasol, to run on even lower grade coal that the power plants can't burn. And for a mine, any export oriented mine, it works out very well. The majority of their coal is very low grade. They couldn't export it. So the part they could export, they made good money on. And they virtually were giving the coal to Eskom at even below cost. So it's always going to be like that. The coal grades in our mines, they go from very, very low grade to unusable to very high grade. So there's a nice spread for everybody there.
If we need to cater to local needs a little bit more effectively, if that is, because that's the premise of this entire, proposal being declaring coal a strategic resource, instead of declaring it a strategic resource, what other options can we be looking at here? Some have suggested rather limit exports of low quality coal that's needed for Eskom to generate power instead.
Well, I think government is thinking that all coal is the same. And as Peter is saying here quite clearly, all coal is not the same. 15, 16 CV coal is very different to 22, 23, 24, 25 CV coal. You're exporting the higher CV coal. The reason that you can economically mine coal for Eskom is if you have a blend of production to the extent that the higher grade coal, to a large extent, makes it economic for you to mine the stuff that Eskom sells. So if you meddle with that, government may get the opposite effect, that they get less coal availability.
Mm-hmm.
Looking at again on the corporate side of things, Mark and Peter, I was talking to John Wallington on this very show, the CEO of Coal of Africa, about a week ago, and he was very enthusiastic, and he said the highlight of my period under review, it was his results day, was the fact that a Chinese company had given them a big cash injection in exchange for shares. Now, how many other deals are going to be on the table of that nature if this sort of rhetoric comes out from government? And if you ally that with platinum and what's going on, the world is going to say, wait a second, we've got a cartel in platinum, you've got a strategic resource in coal, what's next?
Look, certainly less deals. I think the world is more easy to figure out now than ever before. There's 200 countries on the planet, and 199 of them are total capitalism. There's about one who's only 50-50. So not like 10, 20, 30 years ago, people did things for strategic reasons. Now they only do things for capitalistic reasons. So all these investors, they say, I've got 200 countries to invest my money at. Where do I get the highest rate of return? And it's not based on morals, ethics, any other standard than rate of return. And yeah, the Chinese only put that money into Coal of Africa because John was able to show him how cheap his share price was, how large his coal reserves were, how high grade that coal was. But boy, if you start altering parts of that equation and it's going to affect the IRR, there's going to be no more money coming in, probably more money going out.
Mark, especially in a context where you've got Colombia, Indonesia, Australia easily being able to fill the supply that South Africa has capability to bring online.
Yeah, I think the question asked by Lindsay, the answer by Peter over here, it's absolutely true. I mean, we're struggling to entice IPOs in South Africa. We're struggling to get new sort of producers enthusiastic about the future. So we need to be doing everything we can to stop shooting ourselves in the foot. And the mining industry, whether we like it or not, is still key. And the building blocks of this economy are fundamentally based on mining, going back 100 odd years. So I think perhaps there might be, following the BRICS summit, less clarion call for this and perhaps a more measured approach. And I think government would be well advised to stay clear and let the private sector do what it's good at and has been proven to do.
Mm-hmm.
The fact that we're talking about this today on Power Lunch means that it's still out there and it's still up for discussion. But from what we've just said, and considering the supply-demand fundamentals and the geographies of coal, it seems to me that perhaps this is just going to fade away and people will forget what the Minister said at the mining in Indaba all those weeks ago.
Peter?
Oh, I hate to say you're right, but you're probably more right than wrong. You know, Lindsay, why don't we make a real metal that we control like platinum? Now let's make that strategic. You know, let's cut back on exports of platinum and squeeze. We can push that price up. But as Alicia pointed out, everybody produces coal. So by us restricting coal, we're not going to affect the price at all.
In fact, I mean, if you look at it, I came across some commentary, Mark. South Africa does have an adequate supply of coal resources for power supply and exports given the right investment climate. So would we be having this conversation if we managed our investment climate more effectively? Probably not.
Well, now you've got a usable lifetime of coal, and we could stretch that if there were the right incentives. But the way we are at the moment, I think, you know, Peter's earlier point, I think, Peter, I think Eskom's burning about 125 million tonnes of coal a year, which hasn't moved the needle in the last few years, as was pointed out. But certainly at the rate of consumption that we had been used to, we were certainly running down the usable life. Yeah. And we need to make sure that there's sufficient pipeline coming through.